Chief Investment Officer at America, back again. This time joined by first-time guest. How you doing, Topher McPherson?
I'm good. Thanks for having me, Jeff.
Great. Well, Topher is one of ARCA's NFT research analysts. We'll be back talking about NFTs in a second. But first, as always, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. So, all right, those new to the show, same story as always. We write a blog every week for 5 years. It's called That's Our Two Satoshis. You can find it on our website at ar.ca/blog. For most of those 5 years, we talk about markets and investments and things you can invest in. The last 4 weeks, we talk about fraud and incompetence and market chicanery, because apparently that's what the digital asset market has been reduced to. So, it's frustrating, right? I think this industry has a lot of really interesting dynamics to invest in, one of which we'll talk about here in a second with Topher. But all of that is being swept under the rug right now because of the 24/7 news cycle around FTX and everything else that has come before and after it. I don't really want to talk about this anymore. We've been talking about it for 4 straight weeks, but what I would say is that there are a lot of really hardworking people in this space. There's a lot of genuine blockchain enthusiasts and good companies that are trying to operate in good faith and ethically. Shout out to all of you out there. I know it's frustrating to have to deal with this clown circus that just continues to happen around us. But there's, obviously quite a bit of progress is happening in this space. And so we're going to talk just about markets today and not about all the things that are happening around it. And quite frankly, markets have been pretty boring for the last 3 to 4 weeks. There really hasn't been a whole lot going on, even though the equity market and the rates market has been really busy. We've fully decoupled from the macro. We'll see if that's still true tomorrow and on Wednesday when we get CPI and the FOMC. But for the most part, look, the market went straight down. Digital asset market went straight down on the FTX news 4 weeks ago, and it's really been kind of sideways ever since, with an occasional event-driven opportunity, and that's what we're here to talk about. So, Topher, we've been monitoring ApeCoin for quite some time, back to the beginning when they first airdropped the token back in, I believe you said it was March of 2022. A lot going on with ApeCoin and with the NFTs that are part of that Bored Ape ecosystem, as well as staking going live today, December 12th. So let's start with just sort of an overview. What do you think of this project? What did you think about the airdrop when it first happened? Maybe connect the dots for people who maybe don't know this ecosystem as well with regard to how the Ape token fits with the 3 different versions of Bored Ape, Mutant Ape, and Bored Kennel Club NFTs.
Yeah, sure. So everyone who's pretty up to speed with the NFT market knows about the Bored Ape ecosystem and the success that they've had. The Ape token is the governance and utility token for the Ape ecosystem. So from the start, Yuga Labs in their white papers made it pretty clear that the point of ApeCoin is to be the token that fuels the community, right? So they have the ApeCoin DAO. They make all of the important decisions for the Ape ecosystem. And so when it comes to the distribution mechanisms here, really what it is they're trying to fuel their own community to start to build out more and more utility as it relates to the Ape token, because admittedly right now the utility is a bit limited until more things come out, such as the other side metaverse next year.
Sorry, I muted myself for a second. So a lot of, certainly a lot of uncertainty still with regard to what this ultimately will look like in terms of an ecosystem. But I think, it's pretty safe to say that one of the, big winners of the NFT revolution was Yuga Labs. They certainly have created a brand, if nothing else, with all these different assets. And, if you are a holder of the Ape token itself, at least up until staking went live today, it was somewhat independent, right? You could own an NFT and not own Ape. You could own Ape and not own the NFTs. Obviously, they're linked through the governance, as you mentioned. And clearly you probably have some financial rewards from if you owned a bunch of the NFTs and you got airdropped a massive amount of the Ape tokens. I think in the report you wrote that it was up to about $100,000 per NFT that you own that you got airdropped when it was initially came out. So pretty big financial windfall as well. So a little bit of a link there, but truthfully, in the same way that you could be an Amazon shareholder without being an Amazon Prime member and vice versa, you could be an Ape token holder without being an NFT holder and vice versa. So is this the first time that Yuga Labs and Horizon and everyone involved in the project have really come up with a way to link these assets right now that staking is going live?
Yeah, certainly. And I think it's, one of the many firsts that this Bored Ape ecosystem has been able to introduce to NFTs. So I think it's exciting. I think it provides an opportunity for those who have been holding through, such a bad bear market in NFTs, an ability to participate again in the ecosystem, while more things behind the scenes with the brand are being built out.
Okay, so before we get into the specifics of the trade and what's going on here, is this even staking? Should we even be calling this staking? I mean, what's the history of staking is a proof of stake ecosystem. That's not what this is, right? This is, what is the actual staking in this regard when you're talking about ape staking?
Yeah, sure, and that's something that we touched on in the article a bit. Really, it's an interesting kind of debate that's going on in the community right now, which is, when staking began, it began as a way to actually secure and help validate a proof of stake network. But now, some people can argue that it's been a bit bastardized, at least the term staking, because, in events like this, you're not actually staking the network, making the network more safe, more secure. Really, what you're doing is you're almost locking up your tokens to buy time for the project to further build out around their timeline.
Right. So it's not too dissimilar to other projects. Just off the top of my head, Sushi Swap has something similar where you can stake, but you're not actually doing anything when you're staking. You're just receiving rewards for doing so. Same with Axie Infinity, same thing. You can stake your Axie, but again, you're not really providing a service. You're just basically not selling, right? And this goes back to maybe even more of the ethos of this is such a venture capital driven industry, where we just assume that everybody who puts money in early, eventually they're going to try to sell it as soon as their unlock is over. So a lot of these events that have happened in the digital asset space really are pointless and would not happen in any other industry, because all you're doing is trying to prevent someone from selling rather than doing what a good business or project should do, which is try to create reasons for people to buy, right? We're coming up with all these convoluted ways to say, hey, you put money in early and now you have a lockup ending or some reason why you might sell. So let's try to convince you not to sell by giving you some incentive to not do it. To me, that's just backwards right off the bat, right? I mean, these companies and projects should be trying to find investors, even at the early stage investors, who want to put more money into your project as you grow and want to be incentivized to buy more, not just come up with reasons not to sell. So maybe we don't even go as far as calling this staking. We'll call it simply reward-based not selling.
Right.
But with that being said, why don't you walk through what is actually happening here? How does this staking contract work? What assets are eligible? How does this maybe differ or similar to some of the other projects we've seen doing similar rewards-based systems?
Sure. Well, yeah. So when it comes to the staking itself, there are 4 different pools where ApeCoin will be emitted as rewards for staking. So the first being you can stake just ApeCoin only by itself to a pool. As well, on top of that, the second option would be pairing ApeCoin together with the Bored Ape. The third option is pairing together ApeCoin with the Mutant Ape. And then the fourth option is pairing ApeCoin plus a Bored Ape Kennel Club plus either a Bored Ape or a Mutant Ape. So a lot going on there. But the point being is that, really this is kind of the first time that we've seen a large scale staking program where you actually are having the holders join together the NFT and the token into the same stake, which is interesting. It's new. And so, yeah, that's really what's happening here. The rewards are front loaded. So just in the first quarter alone, the first 90 days, there will be 35 million ape, which is 3.5% of the total supply of ape ever, will be given out just in these first 90 days. And then overall, in the next 3 years, there will be 175 million ape tokens distributed to stakers over that period.
Now you've actually physically done this, but you're a little bit of a blockchain nerd. You know all this stuff. What about the celebrities that own a Bored Ape or a Mutant Ape and have how easy was the staking process? How easy was it to understand what was actually happening here?
Yeah, it was very easy. I mean, someone like me who's kind of more in the weeds. The actual technicals of how the contract worked were a bit unique. But when it comes to actually, doing the staking itself, it was extremely simple. You essentially just need to hold the ape coin and or the NFT in the same wallet. You go to their website, you join the two together, and it's actually set up so that staking you can unstake at any time. There's no lockup, which is what you see a lot with staking models, where you're actually locked into the staking contract for a period of time.
Okay, so it's easy to do. There's a lot more free money going out. I mean, this is now an ecosystem that has just been minting money over and over again, right? From the initial wave of all the Bored Apes going up in price to the initial ape airdrop, and now the rewards being brought on top of it. This is clearly a community that continues to reward itself. But we've buried the lead long enough. What's the math behind this, right? What are the yields? Is this going to make the ape token or other of the Bored Ape or Mutant Ape or Kennel Club NFTs go higher? Like, how do you evaluate this? And I'm coming from a sense of, one of the things we do at Arca is we don't get too wrapped up in the technology of blockchain, right? We're looking for real investments, real financial value accrual, whether it's from revenues or cash flows or staking or other things. There's clear financial value here, right? So how did you go about analyzing that evaluating these staking rewards and coming up with some scenario analysis for how this is going to play out?
Yeah, sure. So when the two proposals were released for ApeCoin staking back in April, it caught our attention just because of the sheer amount of rewards that were going to be given out. And we thought that was interesting. And so when we dug deeper into the numbers, really what we noticed was that the NFT holders of the ecosystem did not hold enough ApeCoin or any ApeCoin to fill out the max stake that we knew had to happen down the line, right? So the first thing we did, looking at the wallets, so where does this ApeCoin exist? Because we know with the mechanics of staking that it will eventually have to exist in wallets that hold the NFT. So that was the first thing we noticed, that eventually.
Let me cut in there. Basically meaning if you just own Ape, you can still participate here. But if you just own an NFT, you can't. You're eventually going to have to pair it with either your own Ape or somebody else who owns Ape in order to get these rewards. So clearly, from a design mechanism, the design was to try to get more of the NFT holders themselves to also own Ape and participate in the Ape ecosystem outside of just holding the NFTs themselves, correct?
Yeah, exactly. And, because the proposal in this whole entire ecosystem is designed to be so transparent and work through governance, a lot of this math, it's been publicly available for 6+ months. And there's a lot of on-chain analysis that you can do between wallets, exchanges, liquidity in the order books, where you can start to paint a picture of what likely must happen, considering the potential of how high the yields could be. Even now, after staking has gone live, and I believe there's been over 50 million ApeCoin staked, all of the NFT pools are still holding over 250% APY if you were to annualize the first quarter return. So even with the buying power that we've seen, the increase in price, there's still some really attractive yields, considering how terrible liquidity and interest rates have been in the crypto markets recently.
Okay, so from a scenario analysis standpoint here, you expect maybe one of a couple things happening, right? So one is Ape goes flying because everybody has to buy Ape in order to either stake outright or to pair it with something else that they already own. So your first analysis is just how much incremental buying pressure of Ape there would be. The second would be, for those who don't actually want to be outright long, could there be a way to hedge this? Is there an arbitrage opportunity? And for that, I assume you have to look at the Ape perpetual future to look at the funding rates, to compare the yield that you're getting versus the funding costs that you'd have to pay to maybe be short futures on the other side. In actuality, how would you look at that? Like, were you looking maybe at wallets to try to figure out, okay, are there a lot of people who own just the NFT but not Ape, and therefore would be almost foolish not to buy some Ape in order to get staking yields? Or how do you, it seems like there's a fair amount of cross-asset analysis that has to go into thinking about what the ultimate price impact is going to be here.
Yeah, definitely. I mean, I think that's the most important piece of this. there's only X amount of ape that exists out in the world, and because of the blockchain, we can figure out where that all exists, right? And so between that, between using great tools like Nansen to track exchange flows, wallet inflows, you can see these things happening real time. And so the real opportunities where these inefficiencies are, right? So who hasn't done the math yet on how awesome that this yield might be? And I think that's something where ARCA stands out, and where we can find some edge in the market.
So again, this is not investment advice, but what's your analysis say? Was there a ton of cross ownership right off the bat, or do you think there's a fair amount of people who, if let's pretend the world wasn't hurting right now and people weren't looking for change in their couch cushions right now. Let's assume the world was flush with cash and investable assets. How much do you think there would have naturally been buying pressure for ape, based on the amount of logical NFT holders who should be maximizing rewards if they could? Is it 20%, 80%? Like what does it look like in terms of the theoretical buy pressure on ape here?
Yeah. I mean, that's a tall task. I mean, you can see, just from history when ApeCoin was released back in March, when the market was, as you described, a lot more risk on, a lot more willing to take a stab at tokens that aren't generating revenue yet. So I think in a different alternate universe, I think this would have had a lot more effect. I think a lot of the buying pressure that we saw going into this happened, probably between 1 to 3 weeks ago, and you can see some of that on the chart. But at that point, after FTX fell, liquidity was worse than it probably will ever get. The smallest buying session of buying could really push the price up, and I think what we noticed as well, when it comes to things like open interest, the order books became a lot more thick as we came closer to staking. People were paying attention more actively trading it. So as people were buying, because it was more liquid, it had less of an effect on price as it did 3 weeks ago, if that makes sense.
Yeah, absolutely. So, all right. Well, listen, I think we'll see what happens here, right? Staking just went live today, after being talked about for months. The Ape token has already pretty severely outperformed ETH and Bitcoin over the last week and a half. You're up about 10 to 15% or so versus those assets. So we'll see what happens as we get further into the staking program. I think you've said roughly 40% of what you expect to be staked has been staked so far. So not even halfway through there yet. Look, if people want to learn about fraud and bankruptcies, this isn't the episode for you. But if you want to look at actual math and investable assets and financial valuation, definitely check out the work Topher did on our blog, ar.ca /blog, and check out the math behind this ape idea. But pretty interesting event-driven trade. Like to see it again, that this market still has opportunities like this to make some money, even in a fairly listless market. So Topher, appreciate having you on. Again, everybody, please check out the blog. Please follow. Where can they follow you, Topher? What's your Twitter handle?
Topher GMI. Topher gonna make it.
All right. Good to hear you're gonna make it. So check out @Topher GMI. Check out our website. Topher, good to have you on here. We'll be talking more NFTs and blockchain ideas with you again in the future. That's it for this week. That's our 2 Satoshis. Everybody have a good holiday season, and we'll be back again next week. Thanks, everybody.